continue to blow your account is not what you actually think. Most people believe it's because they take too many losses, they don't have a high enough win rate, and that's just not the real problem. The truth is, you could have a 70%, even 80% win rate and still be in the red. This is exactly why your account continues to go around in circles. You're focusing on the wrong thing. And it's just not about avoiding losses. You'll always have losses. So in this video, I'm going to show you the real reason why traders blow accounts and how to flip that script into consistent growth. By the end, you'll understand exactly why win rate doesn't pay the bills and what actually does. So let's get right into it. All right, so before we get into it, I do want to explain these two terms that you need to understand. So your win rate is the percent or number of trades that you win on average. So let's say out of 10 trades, you win 6 of them, you have a 60% win rate on average. And your RR is your risk to reward ratio, meaning how much you win versus lose per trade. So some people have what's called a 1-to-1 RR. They risk $100 to make $100, or they risk $200 to make $200, $300 to make $300, so on and so forth, and that's called a 1-to-1 RR. And other people have different RRs as a 2-to-1 RR, meaning they risk $100 to make $200, or they have a 3-to-1 RR, meaning they risk $100 to make $300, so on. They risk $200 to make $400, $500, you get the gist of it, you get the point. So I'm going to be debunking a common lie told within the trading community about you need to have a high win rate. You got to have a high win rate if you want to be profitable. And that is simply just not true. The real reason is a lot of people don't understand how to actually manage their risk properly, or how to understand what their RR is, their risk to reward ratio on specific trades. So I'm going to be teaching you that today, and I'm going to take you through 2 different traders, 2 scenarios. So trader A has an 80% win rate with a 1-to-1 risk to reward ratio. Seems really awesome. Seems like trader A has got his everything together. He's got his stuff going for him. He's super profitable, doing a super awesome job. Now, trader B has a 40% win rate with a 3-to-1 risk to reward ratio. So this means that trader B, on average, out of every 10 trades, trader B is only winning 4 of those trades. And on average, trader A, out of every 10 trades, is winning 8 trades. So trader A seems like the better trader here, the more profitable trader here. And trader B kind of seems like a failure, isn't profitable, has only a 40% win rate. And I'm going to debunk that for you real quick. But before I do, why don't you tell me who you think the more profitable trader is? All right, now that you got your answer, let's go through it. Let's debunk this. So trader A right here, over a total of 8 wins, let's say their 1-to-1 risk to reward is $50. So they're risking $50 to make $50. Over a total of 8 wins times 50, that would be equal to $400. But in addition to the 2 losses times 50, that's a $100 loss, and this puts them at a net profit of $300. Seems good, but over the course of 10 trades is kind of all right. Now, we have trader B here, and over the course of 4 wins of $300, that is totaling up to $1,200. But those 6 losses of $100, because this trader has a 3-to-1 risk to reward, they're risking $100 to make $300. They actually have a net profit of $600, which is more than trader A. So despite you at first probably thinking trader B is worse, they have a 40% win rate that's really low, they're not profitable, that's actually incorrect. And trader B triples the profit even with a much lower win rate. So stop obsessing on your win rate. It's okay if you're taking losses. That is what trading is about. We take losses. But what you do want to start focusing on is your risk to reward ratio. Your edge comes from controlling risk and letting runners run, not chasing some perfect win rate, because that's just not how trading works. And generally, if you have a high win rate, your RR, risk to reward, is just going to be lower on average. That's kind of just how it goes, because you're not targeting as much profit as someone with a lower win rate but trades higher RR. So how do you actually get to this higher RR area? how do you start trading with a higher RR, and I'm going to show you real quick. So these are a couple hacks for trading with higher RR. Number one is only trading key levels. So right now I could probably guess and assume that you're entering in the middle of nowhere. But when you wait for price to actually hit your supply or demand zones or strong, well thought out support and resistance levels, your stop is tighter and your target will be much wider. So instead of just trading nearly in the middle while price is choppy and trying to just target a simple 1-to-1, you're actually waiting for that perfect A plus setup, a higher or lower level to actually hit, and then for you to take that trade. Now, for number two, if you risk small and target big, 1 to 2 are minimum. So, with this, before you click buy or sell on your trade, ask, can this trade realistically hit a 2R? So, can I realistically risk $100 to make $200? If the answer is no, then you should pass that setup. You should be looking for setups that are going to grant you a higher return on average. So, any A plus setup should easily offer a 1-to-2 or a 1-to-3 RR. Rule number 3 is to align with a higher time frame bias. Don't scalp against the trend. If the 1 hour and the 15-minute agree, you're stacking odds in your favor, and that's when a big move will come. So stop just watching the smaller time frames and hoping to just get your small little profit out. If you actually take a look at high time frames and see when I should actually take this trade and I should wait till this level to take my trade because that will grant me a higher reward, then you should do that. Now, rule 4 is to obviously wait for confirmation. A lot of people do not wait for confirmation. They get greedy, they get anxious, they want to hop in a trade, causes them to take more losses, or just causes them to have a not as high of a risk to reward ratio because they aren't actually waiting for that confirmation to hit. So, what you want to do is patience will equal better RR. You want to let the market reject at your level or break structure or give you exact entry. Chasing far too early with wide stops and tiny targets will kill you. Now, rule number 5 is kill the extra trades. One A plus setup is far better than 5 random ones. Limit yourself to 1 to 2 trades per day max. The fewer trades you take, the more selective you'll be, and then your RR will automatically get higher. And you don't even have to win as many trades. On average, you could be taking a couple trades a week, you could have a high RR and a lower win rate, but it wouldn't really matter because your wins are going to be much bigger than any losses that you have. And rule number 6 is your fixed unit risk. So pick your dollar or percentage risk, 100, 200, whatever, and stick to it. For most portfolios, I say don't risk more than anywhere from 2 to around 4% of your entire portfolio on a singular trade. So that means if you're trading an options contract that costs you $500 and you have an account that's worth, $1,000, you do not want to be risking more of that singular contract than around 2% of your total account or anywhere from 2 to 4%. So maybe your stop loss on that option contract is when it goes down $40 or so that you have a really, really tight risk on a smaller account. So I would say keep that fixed risk unit. And then for number 7 is letting winners run. So don't kill your winners too early. And this comes a lot from actually planning out your targets in advance. You want to know exactly where you should be exiting versus now you're in the trade. You don't know exactly what your exit is, but you're getting a little nervous. You see the profit coming in. Okay, so I'm just going to take my profit here and that'll be that. And then you see the trade go further, giving you FOMO and giving you a chance to potentially sit there and say, oh, let me hop back in. No, if you actually just waited and you actually let your winners play out like they were supposed to because you picked out your exit point, then you would and will be golden. So here's the bottom line. You're not losing because you're bad at trading. You're losing because you overtrade, you move your risk around, you cut your winners too short, you don't understand your win rate, and you don't understand your risk to reward ratio. So the solution is going to be focusing on A plus setups that give you a higher RR. If you stick to these rules, Even with a 40% win rate, you can still grow your account even more than Trader A would ever grow their account. So that is how consistency will be built. If this helped you, make sure to hit subscribe. I post breakdowns every single week. I post educational videos all the time, trade recaps, stock watches, all of the above. So if you like this video, make sure to stick around and hit that subscribe button, and I will see you all next time.